All right, guys, it's that time once again to discuss what I'm buying this next month. And there are some massive names on this list, and there's some names that did not make the list that may make a few of you guys out there mad. So I'll give you those stocks individually and the exact reason why I'm picking those stocks. So let's jump into it. Right after you hit that like button, if you like getting the truth without the hype, because that's exactly what you're going to get today with these stocks. All right, guys, now remember, these are just my stocks that I'm targeting based upon my plan, what I'm doing, the money I have coming in, and everything else in regards to investing. And more importantly, based upon my valuation of these stocks and my position sizes in these stocks and other things of that nature. So it doesn't necessarily make them the best stocks to buy this month or anything else like that. They're the ones that fit my plan, my valuation, and what I want and how I want my portfolio makeup moving forward. So it's totally okay if my list looks different than yours. The key point here, especially in a month like October that we have coming up, is to have a plan and a specific price target to buy stocks at. Because if we get chaos like we've got in the past during election years in October, don't know if we will or not. Sometimes what, happened last time or what happens most of the time happens again. Sometimes it just runs, right? September's supposedly the worst time in the stock market, right? It's the worst month. And yet we've had an incredible month here in September in regards to stocks. So it doesn't always work out that way, but either way, you need to prepare for it. And so these stocks are the ones that I'm prepared to buy in the event we get all that sort of chaos and everything else. And even if we don't get chaos, I might get chaos just in my individual stocks, maybe one or two of them, maybe all of them. I'll get some crazy chaos on it. I'll be able to buy it, even if the market just rockets up and continues to go up over the course of October. Who knows? I'm not here to guess short-term movements. I'm here to be prepared to take advantage of those opportunities whenever they come. And check this video right up here if you want to see exactly what happens whenever you take advantage of opportunities just in a regular year, kind of like we've had here in 2024, and how much money is to be made during that time frame. So stock number one is Google. Now, I don't know why everybody thinks it's behind. It's like it's been in the doghouse for the past couple of years. Despite it really, since those 2022 lows, basically doubling up from there, it still kind of feels like it's in the doghouse. It feels like it's always being discounted. They're always quote unquote behind. Every once in a while, I'll pick up steam, but then, the Justice Department's investigating them. Then, this app is going to kill it, or they're behind in this race, or whatever the case is. I don't know. It just kind of feels like it's been out of favor despite us getting a double up in the stock. But when you look at the actual metrics of the company, the growth rates, the valuation, and everything else, there is none out of the big tech. None of them are trading cheaper than Google is right now, in my opinion, of course. So why would I not continue to buy a great stock? Ignore the noise, guys. Meta goes through periods of time like this. Apple's gone through periods of time like this. Microsoft has gone through periods of time like this, where they're just kind of out of favor for one reason or another. All the while, earnings underneath are clicking and they're executing wonderfully. So I don't know. For me, I've seen this in the past. I look at the company, I look at the fundamentals, they're doing great. The valuation is cheap. So I'm going to continue to add Google on a DCA every single time it gets kind of right around that 160 range or so. So nothing crazy here, nothing over the top. Just, hey, it gets down below that, I'm just going to DCA right into the stock as long as Wall Street wants to keep it beaten down like that. Because for me, nothing has fundamentally changed with the company at all. It's just going through, I don't know, just this weird period of time. Either way, we've made money on every single buy that we've made of Google so far. So I'm more than happy to add again and be down in the short term in order to be up over the long run like we are with Google. And it's a great company. So stock number two is Amazon. Now, this one admittedly has been on a run lately. It was a great pricing last month. That's the reason why it was on my list last month. Obviously, we bought shares. Very, very happy with those shares that we bought. We're up pretty good on those shares. But Amazon is getting kind of close to that fair value range. It's not quite there yet. It's still a little bit undervalued, but it is kind of getting closer there. But as we've seen with Amazon, it can move $20, $30 over the course of just a week or two. So I have it on my list as a DCA if it gets down below 180 for myself. Now remember, I have, just like with Google, I have a full position in Amazon. I don't need any more shares. I've been investing for over 25 years. So at some point in time, most investors that have invested that long have picked up shares of Amazon along the way. So I'm very, very happy with my Amazon position. However, it is a great company, great future. I don't think there's anybody here that thinks people are going to do less business with Amazon than more business with Amazon 5 years from now. So anytime you're getting a little bit of a discount there, it's worth adding in my opinion. So I'm just putting it right back on a DCA. As soon as it gets down below 180, I'm going to start DCAing again. Obviously, that number would be different if I didn't have all the shares that I did. So that's why you got to do your own analysis, your own due diligence on it. But I think we can all agree that it's a great company and a great stock. So stock number three is Sofi. All right, I think we've talked a lot about SoFi on the channel. You guys know that I love the stock. It is still firmly trader controlled though, so we get wild ups, wild downs. That's the reason why it tends to run away from my valuation and where I want to add shares, and then it comes right back down to it, it seems. Now, how long that yo-yo is going to last, who knows? I'm not here to guess it, but I'm well into bonus shares now. So I have a full position built out, which for each person that's different, right? I mean, if you have a $20 million portfolio and somebody else has a $20,000 portfolio, obviously a full size is going to be very, very different. So there is no one number to rule it all or one percentage to rule it all or anything else like that. For me, it's how much money I'm willing to risk. And as long as this company continues to execute on earnings like they've been doing consistently now for over 2 years, I'm more than willing when Wall Street wants to get dumb and get it down to my price target to add more shares. So I'm going to continue to add whenever we get back down to that price target. It doesn't look like it's close right now. However, we've seen in the past with SoFi, it can just kind of get beat down for a couple of weeks and it's right back in range there. So I'm going to add shares to the stock. Anytime that happens, that's exactly what I'm going to do. Heck, just a little while ago, just maybe a month ago or so, we were able to add shares in the $5 range. I guess it was a little bit more than a month now. That was 6 weeks ago. So anyways, the point being, we were able to add shares in the $5 range. If you can believe that. We got that particular opportunity with SoFi, which the September stretch sale is live and it goes away in just a couple of days here. So make sure you take advantage if you want to see all the buy and sell alerts that I do on every stock across all my portfolios. And I've made 83 buys now or so, 84 buys or so now in regards to the stock market just this year. And we are up on the vast majority of those. So make sure you check out the pinned comment down there. We'll talk more about it at the end, but that September stretch sale is available for a couple more days. So make sure you take advantage. All right. So before we get to the last one, and it may shock you guys a little bit. Some of you guys are going to shock. Some of you guys are not going to shock. Anyways, the point being, before we get to that, let's talk about Tesla real quick here because it did not make my list once again. And as we have discussed many, many, many times on this channel, every single time I make a Tesla video, I try to teach you guys that valuation is what matters. And right now, Tesla is trading incredibly rich from a valuation perspective. Now, if we're talking about 10 years from now, of course, I'm right there with you guys. I think it's looking good over the long run to be a great buy. However, in terms of the short term, regardless of whether people want to call me bears or whatever the case was, hey, I was buying at 140, 169 because that's what valuation told me to buy at. And right now we are enjoying a really, really good run, I think, into the robotaxi event coming up here. And we may end up seeing some downward pressure after that, unless there's a significant shift in earnings. But we have not seen that shift yet. I think we've kind of seen the bottoming in regards to EPS and margins and some other things like that. But we definitely not have seen the big uptick yet in regards to that, to where we get a bump up in regards to valuation. We still haven't seen that yet. And there's no clear indication that it's coming next quarter. And even if we do get that bump, it is not really enough, depending upon, it's got to be some sort of a huge, massive surprise. If it's barring something like that, it's not going to be massive enough to justify the current price that it's at right now coming into this event in regards to that being fair value, in my opinion, of course. Now, remember, I own all the Tesla shares I want, so I only want bonus shares. But that's why this particular stock is not on my list this time around, because it's got to come down quite a ways for me to be interested in buying it again. Now, again, I have a full position. I have more than a full position. I got bonus shares, so my situation is a little bit different. But right now, Tesla's trading really rich, and that's the reason why it's not on my list. It has nothing to do with my bullish long-term outlook on Tesla or anything else like that. We're just trading rich right now, and so I got to take a breather. I'm going to focus on some other stocks. If Wall Street does get crazy and beats it down, let's just say the robotaxi event severely disappoints and Wall Street just gets crazy over the next couple of weeks after that, of course, then I'll buy it on there. And of course, I'm sure we'll talk about it in a video right here on this channel. But right now, it's not close enough. And with the robotaxi event still coming, it's not close enough for me to put it on the list this time around. That's why we're not seeing Tesla. But let's jump to the last stock on the list here. And that stock would be PayPal. Hey, good news, guys. PayPal's finally moving. Also good news in a sense, depending upon where you bought at and everything else, it's still on a significant discount from fair value. So you have time to build out that position more. Now, as we've seen with PayPal, it can go on runs and get beaten right back down. But it kind of starts to feel like that fintech is starting to wake up a little bit, guys. I'm not calling a bull market or this massive run, or it's going to be, follow up the AI run. This is fintech is next in the thing that Wall Street's going to get behind and push into a crazy bull market. I'm not saying any of those sort of things at all. But we are seeing momentum consistently moving in the right direction. It seems like it was just a month or two ago, we were talking about, hey man, if they can just hold that 70 line, we'd be really, really happy, because it was kind of vacillating, kind of get up over 70, then we get beat down, into the mid to the low 60s, get back up over 70 again. Same kind of thing, rinse and repeat. Now we're approaching that $80 mark to where, hey, it's starting to look like we may hold that $70 line. That's good news for us as investors and those of us that have way more PayPal or PayPal as we call it in the group there than we ever wanted to own. I've been very impressed with management. I've been very impressed with the earnings. They're executing on target, on time. And I think the big numbers are to come in the future. Not necessarily next quarter, really not fourth quarter either, but I think that first quarter, basically March timeframe next year is when we start seeing the big moves in EPS. Of course, if it happens earlier, great. It means it's going to run faster, but that's when we start seeing those huge moves in EPS. So we're already sitting cheap from a valuation perspective right now. Let's say the stock trades flat for the next 6 months, and then we get that big bump up in regards to EPS then as well. It's going to either be stupid cheap or Wall Street's going to get on board and this stock's really going to move really quick. So for me, I have all the shares I want. I'm well into bonus shares here, but I'm going to continue to add shares here and there because the valuation is still cheap right now in regards to the stock market. And I got to put my capital to work. Right now, there's a lot of stocks riding really, really high that I want to add to, but they're just overvalued right now. And so I've got to wait, be patient, take what the market gives me. And if you want to know exactly how to do evaluation, do price targets to where you're not overpaying, but you're actually taking advantage and underpaying, and you want to see those buy and sell alerts in real time, you want to see my complete watch list with price targets so that way you can kind of have an example to go off of. You want to take 5 courses for free, get your free coaching, be a part of the best 6, 7, and 8-figure Discord out there with super investors, basically helping you work through all the different materials, all the different concepts. Make sure you check out the pinned comment. There is no group out there that has more for less. The September stretch sale is going on for a couple more days here, guys. So make sure you take advantage before that sale expires and the price goes back up. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. Thanks for watching, and we'll see you in the next one.